Ladies and gentlemen, welcome back to the channel. Here in this video, we will be going over number one, why I think stocks are about to enter into an explosive upside period. Now, keep in mind, I'm not talking about specifically September. September is going to be a dicey, choppy month, but the stage is getting set for a very large rally. And what we seen on Friday, I think, was a good step in that direction. I was actually impressed with how bad the jobs report came out and how well markets did. Now, not all areas did well. There was a rotation, and it highlights something very important. We must discuss this here in today's episode. We will also be going over your breaking news today, what Donald Trump has said, comments around the Fed chair, around India relations, the G20, all of that. We will talk about as well. I will give you a broader market update on sentiment, on a little bit of positioning, and again, my expectations for a pretty aggressive upside event into the end of this year. Hit that like button and subscribe to the channel if you have not done so already. If you guys want to come trade with us live in real time, every time I make trades, I send out alerts. Check that link out down below in the description of this video. Let me be honest, we're going out, we're finding small cap AI stocks before Wall Street does, okay? Think about it like this. If you were able to invest in Palantir as I did on IPO day when the stock was $10 per share, well, you've gotten big returns, and you didn't have to take on zombie-like company levels of risk, okay? If you want a 10, 20, 30x stock, normally you have to take on a lot of risk. Well, if you can be early and identify the big winners early, you can get companies like Palantir, companies like NVIDIA, right? Without having to take on all of that risk and still investing in higher quality companies. That is what we are doing. You got to be early to these stocks. And that's what we're doing, okay? Trading portfolio is up a whopping 97% year to date, and I think that's only going to get crazier into the end of this year. Now, keep in mind, it's not financial advice. I'm not a financial advisor, and I'm not your financial advisor. So contact one before making an investment decision. And keep in mind, if you blindly just copy what anyone else is doing, you will lose money, probably lose all of your money, okay? As a aggressive disclaimer here, right? What I offer is something to help you learn this strategy for yourself, if you'd like to, and to be able to spot these opportunities now and forever in the future. And that is what is really going to pay dividends in your portfolio. So check it out, link down below in the description of this video if you would like to come join us, and let's get into today's episode. Now, before we get into all of the breaking news that you need to know coming out here in the past 12 hours or so, I really want to discuss this end of the year rally briefly and why I'm so excited about it, okay? Because what we seen on Friday, I think, was incredible. Yeah, the jobs report came in bad, really bad. 22,000 jobs. We were expecting 75,000 jobs. Unemployment rate hit the highest level since 2021 at over 4.3%. But what you actually seen was a rotation, more or less. If you look at the S&P, you were down about 1/3 down 0.2% in after hours. Look at NVIDIA, down 3%. Amazon, down 1%. Microsoft, down 3%. Other big tech stocks down as well. But what did we have? IWM was up 0.5%. So, as I've talked about on this channel before, not all rate cuts are equal, right? If you get rate cuts because the economy sucks, the labor market sucks, that should not be taken as good news. But it was. We got a bad jobs report, and it was taken as good news for small caps. Yes, that means more cuts, but potentially cuts not for the right reason. What I got out of Friday is the stock market is really not concerned about going into a recession. Now, why is that important? Okay. That is important because, yes, we're in a weak September seasonal period. Okay. But big money positions ahead of time. So big money is going to position for a recession, or they're going to position for, markets to do well ahead of time, right? They're always the first ones to the party every single time. And this jobs report on Friday, well, it looks bad. Wall Street says, that's not bad. That's not recession. Thus, seen small caps go up. The benefit from rate cuts was not offset by a weak jobs report. In the month of September, when seasonals are bad, you would have expected the Russell to do really bad on Friday based on the jobs report. And again, that did not happen. So I'm kind of tying this into my broader theory on why from really middle of October, November, and December could be one of the strongest 2.5, 3-month periods we've seen in the stock market in a very long time. Okay, let me break it down for you if this is the first time you've heard it. Okay, we should have inflation that continues to trend lower, trade deals done. Now there's the whole court litigation, so it's going to make things a little bit weird if the courts rule against Trump. But overall, by December 31st, we should have a lot of clarity on what trade is going to look like. Okay, geopolitical tensions that die down. The provisions in the big, beautiful bill are very bullish. No tax on tips, no tax on overtime, being able to write off different things on your taxes like interest on vehicles, so on and so forth. That should help the consumer recover a little bit. Like 2026 tax season should be pretty damn good for folks. Okay? Like if you get $25,000 in tax income, and you consider a federal tax rate around 20%, you're going to save $5,000 on that. Like you should theoretically get like $5,000 extra dollars on your tax return. That's a lot, okay? If my numbers are correct. If they're not correct, correct me down below in the comment section. But you should be getting a substantial tax return back. So 2026 should be a pretty good year for the consumer. Hopefully they can start to recover a little bit. Now, Wall Street, they price things in ahead of time. So the last 3 months of this year, we're going to be starting to price in some of that good 2026. Now, fact of the matter is we just got done with the best earnings season we have had in years. Okay. Earnings were very strong. And the fact of the matter is earnings do not collapse for no reason. Right? If earnings came in this good for Q2, even though, you had trade and tariffs and all of that, it's very unlikely that earnings collapse anytime soon. Okay? It's just very unlikely. Okay? So that's a strong sign for the economy as well because earnings are mainly tied to the economy. Sure, you have big tech that's not as correlated to the economy, but broadly speaking, earnings are correlated to the economy. The better the earnings, the better the economy. The better the economy, the better the earnings, right? That's why stocks, if you didn't know, react so much on economic data because it directly correlates with earnings. Now, we also have one of the big sleeper catalysts next year, and I'm calling it a sleeper catalyst because nobody really talks about this, but it's real estate. Okay. So for an example, I purchased this home that I'm in right now in Michigan in March of 2021. Perfect timing, right? Like timing couldn't have been better. And yes, I own 2 other rental properties. Okay. It's not my first rodeo, but again, perfect timing. I bought this home without even looking at it. Didn't know if I was going to live in it, but knew the price was right at about $72,000. Okay. Guess what this home is worth today? Yeah, I've painted, I've put in luxury vinyl plank, I've redid the cabinets, I've done the trim, like I've done some cosmetic shit, okay? Couple $1,000. Guess what this house is worth? I could list it today around 200 to 220,000. Okay. If I wanted to sell it quickly, or if, as I expect will happen in 2026, more inventory comes online and it's more of a buyer's market, I could probably sell it for like 180. Okay. If price comes down a little bit. Owing about 60,000. Could net anywhere between 130,000 and 180,000 or so, 170,000 or so. If I was the average person and just could sell a home, get a new home, and have over $100,000 in the bank, people are going to spend that money. Okay. But this home, when I bought it, its mortgage was $500 a month. Today, after taxes and all of that going up, it's about $800 a month. So like, yeah, mortgages have definitely went up. Okay. But if I wanted to get this house today at 180 grand, 200 grand, it's going to be like $2,000 a month. The average person cannot afford that kind of a payment, right? So that's why people are not selling their home. Okay. And that's why they can't realize that equity. Sure, could you go to the bank? Of course, but a lot of people don't want to do that or don't even know that that exists, that you can tap into home equity fairly easy. Okay. So people are going to get a lot of money once they can start to sell their homes and buy new homes for reasonable prices. And that is going to unlock another level of the consumer recovering. All while at the same time, in 2026, inflation is coming down, consumers getting better, corporate tax structure is much better than what we could have imagined, especially being able to depreciate capital expenditures. Like if you're a farmer, you can go buy a new tractor and write off 100% of it. You can build an AI data center and write off 100% of that. You know why Amazon didn't pay taxes at all for like 20 years? Because they had so many losses and so much that they could write off year after year after year. Well, think about that now on steroids, essentially. Like, yes, it could actually encourage quite a bit of frothy behaviors, even in the corporate world. That's not a problem until it is. We'll be watching for that. And that's one reason why I think next year we could have a euphoric market, not a bubble, but a euphoric market where good companies are rewarded more than you would expect. Hence why I think right now is a great time to be in the trading community. Well, we could start talking about a bubble towards 2027 or 2028 if the markets just go crazy next year, which I think has a fairly good shot of happening. So when I put all of this together, it's hard to be bearish. Okay. Now September again has some weird seasonals, but all of these things that I'm talking about really for 2026 will start to be priced in towards the end of this year, as the markets are a forward pricing in or forward discounting mechanism of future returns or future growth. We could be setting up for a pretty damn parabolic rally into the end of this year. And I don't think a lot of Wall Street is prepared for this, right? As we look at the AI Investor Sentiment Survey, 43.4% of investors are bearish, 23.9% are neutral, and 32.7% are bullish. There's a lot of bears out there. CNN's Fear and Greed Index, even as the S&P hit a briefly new all-time high on Friday, you're coming in at 53, which is neutral. You're not even close to being overbought or overextended here. Market momentum is neutral. Stock price strength, extreme greed. This is very important. Net new 52-week highs and lows on the New York Stock Exchange. So at the same time, I don't think I've ever seen this before. The headline number is neutral at 53. Stock price strength, extreme greed. Stock price breadth is greed. Put and call options, greed. But those two metrics are telling you like, hey, Something is driving down the index or keeping people bearish, which is likely Trump. And uncertainty and aggressiveness that things can change from Trump. But really under the surface, markets look fine. That's what these two metrics, stock price breadth and stock price strength, are telling you. It's pretty incredible. Market volatility is neutral. Safe haven demand is fear. You can also see this if you look at the percent of stocks trading above their 50-day moving average at 63.2%. It actually went up on Friday. So even though we had a bad jobs report, even though we're in the month of September, and I would have expected stocks to have a bad trading day. I actually said on Thursday that if we came in with a jobs report under 50,000, it was probably going to be seen as a negative. Okay. In fact, the June jobs numbers were revised to negative 13,000. Like, I wouldn't have expected the Russell to go up 0.5% because the Russell is very sensitive to, yes, interest rates, clearly, but recessions, right? So if the markets were really fearful about a recession, which, keep in mind, big money moves markets. It's not retail, it's big money, okay? If big money was really fearful that a recession was coming, the Russell would have been down a lot. And rate cut odds, yes, they skyrocketed on Friday, but it doesn't seem like for the bad reason, or for a bad reason, right? Not the whole recession reason. So again, when I put all of this together, as long as things do not get dramatically worse with the economic data, like, we are setting up for a very strong end of this year. And again, unless something dramatically changes with, trade or something along those lines, like if a trade deal fell through with China and 150% tariffs were back on, like, you're not going to get a year-end rally. But as long as nothing crazy like that happens, I think a very strong year-end rally is coming. And I think any weakness in September is a massive opportunity, in my opinion. Now, with that said, let me know your thoughts on that down below in the comment section. Let's get into all of your broader market breaking news today. Now, in broader market news, Donald Trump says the European Union must stop this practice against American companies immediately. He's referring to the fees and penalties and taxes put on U.S. tech companies. U.S. Secretary of War Hegseth says the U.S. will go on offense, not just defense. Trump says the Ukraine war will end or there'll be hell to pay. The US and EU will discuss new Russia sanctions on Monday. Trump says we want to get along with other countries. Trump on the jobs report says he will talk about that soon. Trump says China, what they're doing with fentanyl is a terrible thing. It's coming through Canada. A senior US administration official says penalties can include sanctions, export controls, and exclusion from the US of those responsible for detention. Trump says it is exciting to host the G20 next year. And he says the 2026 G20 will be in Miami. Trump says that Hassett is considered for a different position, which we now know is potentially the Fed chair role. Trump says the US will end up with more electricity than China. Trump says that he sort of knows who he is going to pick for the Fed. He says that Hassett is one of 3 possibilities for the Fed. Trump says that Hassett believes in low interest rates. And Trump predicts gas prices will be $2 a gallon soon. There's definitely some kind of deal between Trump and Saudi Arabia. Over this weekend, specifically tomorrow, there is going to be an OPEC Plus meeting where Saudi Arabia is pushing for another hike in output, which would lower prices. Trump says Vice President J.D. Vance will take his place this year at the G20 in, I believe it's South Africa. Trump will invite Poland to the 2026 G20 as well. And Trump says he will consider Russia at the 2026 G20. Trump says the interest rates are extremely high and he calls them excessive. Trump says there are more elements not shown yet in the jobs data. Speaker of the House announces that Trump was an FBI informant tasked with taking down Epstein. Hassett says that indicators point to a strong situation in the economy. And the G20 will take place at his Doral golf course. That's Trump's golf course. U.S. Treasury Secretary Bessent does not want the Fed job, although we've heard that before. It's being reiterated again today. Trump is considering Warsh, Hassett, and Waller as possibilities for the Fed role. Trump says the big year will be the next year, and yeah, I think that's correct. I think 2026 is going to be a big year for markets and a rebound for the economy. A rebound in the sense of consumers starting to get ahead again. I think some of that has to do with real estate. I think as rates come down, as people can sell their homes again and get a new home, people are going to have a lot of extra money in the bank from selling their home. And I think that is a really underrated part of next year, is real estate that can start to move again. Trump says that Google is a great US company, and he says that Europe has been imposing astronomical fines. And Trump says he will discuss with the European Union about tech fines. And in the news today, President Xi of China and Putin will be observers at the G20 next year in Miami. Trump says that he has decided which city he will send the National Guard to next, but he won't disclose the next city just yet. And again, if you do not support this, like, you should, again, unsubscribe. Because if you've ever grown up in a very violent city or lived in a violent city, like, this is a good thing. Politics aside. Like, this should have happened a long time ago. Trump says he does not worry about U.S.-India relations. And he says he will always be friends with Modi, that is the Indian Prime Minister. He says we just have moments with India. Trump says that nearly $17 trillion will be invested over the next couple of months, and he expects the figure to increase significantly. Trump says that AI plans are massive after Zuckerberg announced $600 billion in AI spending through 2028, which is, similar to other companies. Modi, India's prime minister, reciprocates Trump's positive assessment of ties, which is a step in the right direction in terms of trade. Now, the CNN Fear and Greed Index is coming in today at 53, or at least on Friday. The previous close was 51. Market momentum is neutral. Stock price strength, extreme greed. Stock price breadth is greed. Put and call options in greed. Market volatility is neutral. Safe haven demand in fear, and junk bond demand in fear. As we talked about as well, the AI investor sentiment survey is pretty bearish right now, with bearish investors at 43.4%, neutral investors at 23.9%, and bullish investors at 32.7%. People are not bullish at all. And that is positive for the stock market. You want bears. You need bears to keep the stock market moving higher. And we got plenty of those. On Friday, you had the percent of stocks above their 50-day moving average. This is really what I look at as a sign of breadth in markets and internal strength. At 63.2%, even though we had a bad jobs report, you actually went up almost 1%. Almost 1% of stocks broke above their 50-day moving average on Friday. That is a very strong sign. And although we have trended lower from about 80% we seen in about mid-June or early June, you're still sitting at pretty elevated levels, which is a good sign. Now, let me know your thoughts on all of this down below in the comment section. I know we talked about a lot, and it might not make sense to a lot of people. So again, if you have questions, let me know down below in the comment section. If you guys just want to jump straight for it, come trade with us in the trading community. Come get involved in the conversation and be in the right place, I think, at the right time, the dawn of a once-in-a-lifetime opportunity in AI. I can think of no better place to be than trading with us. Check that link out down below in the description of this video. Keep in mind, you have to link, I'll say this again, you have to link your Discord on Patreon. Go to your Patreon, go to settings, go to apps, click Discord, and log in. Takes about 10 seconds on a computer, a little bit more difficult on a phone. If you have problems, message me, okay? And then the links will work once you have linked your Discord on Patreon. That is the number one thing that I get questions on all the time. It's very easy. If you cannot get to a computer, I recommend that you get to a computer. Go to the library if you have to. Okay? Probably not the greatest place to go, But again, if there's a will, there's a way. If you don't want it, then, you know, don't fool yourself into thinking you want it, okay? If you want it, do it, be about it. That's it. So, thank you guys for watching. On a Saturday? You guys are winners. Hit the like button and subscribe to the channel. Again, link down below in the description of this video for the trading community. Have a great rest of your day, and I will see you in the next one.